All right, so let's get straight into the watch market itself. I think that many of you are in the understanding that there is an actual watch market out there. Both there's a new watch market, there's an actual used watch market, there's a gray market, which we're going to talk about, and we're also going to kind of look in general into understanding the overall market as a whole and what's actually impacting it. Now, it's very important to understand that when we talk about the watch market, we are not talking about Michael Kors watches. We're not talking about some watch store in the mall that sells Fossil watches or Invicta or some garbage like that. We're talking about the luxury, high line watch market, which includes boutique timepieces like Panerai, Hublot, etc., as well as Rolexes, Corum, and some of these other manufacturers of luxury timepieces, preferably rather than mass market timepieces. So just so we understand. So in this section, we're going to cover what the watch market consists of, how big it really is, and what dictates the changes that occur to it. Now, why is the watch market an attractive business? It's a very easy to get into business model. Very, very easy. Once you actually make the purchase at the right price, the watches appreciate rather than depreciate, unlike cars. Meaning that the longer you hold a watch does not mean that its value will continuously depreciate while you hold inventory. Now, costs of metals, which are always increasing in a sense, they have their full fall, but eventually keep creeping back up. That also has a take on the increase. And there's also a little bit of a currency play here too, like meaning when currencies go up, it gives you an opportunity again to also either buy high or buy low, etc. The other cool part about the business model is that obviously you get to wear what you own. This is cool because unlike cars, there's no such thing as putting mileage on watches, meaning that you can wear them for weeks. The only thing is you have to make sure you don't just scratch them or hit them around. And then just-in-time inventory, meaning in a lot of cases you'll get good at this. You won't even need to hold watches for the long term. So short-term inventory, meaning you just buy immediately, have a buyer before you even buy. You buy, you sell, you make money. And then of course, while it is a cash-intensive business, meaning many people will just make purchases in cash and nothing else, reality is still that there's still significant write-offs that you can still take advantage of, so that it helps you as a business, or it may piggyback on another business you own, or B, as a person, it ultimately helps you as well because it gives you an opportunity to now write off some of these things like luxury items. We've taught you in ECH and exotic car hacks that are actually write off cars. In this case, we're going to talk about writing off watches. Now, this is the other thing, that there's two types of people that do this. There's those, most people start this part-time, meaning that most people will actually just get into the business on the hope that they'll sell a few units there and there, maybe make a few grand a month, like 2,000, 30,000 a month. And to some people, that's plenty of money and that's enough. Other people will get really, really good at it, meaning like to the point where they're like taking orders for watches, going out looking for clients, and ultimately become a full watch trader, even start an online store. Even if they're still somewhat part-time doing it, they'll invest the time into the infrastructure. So either ways, there's still leverage. So it doesn't mean that you have to do one or the other, that one or the other makes more money. I think it all comes down to just getting to know what you want to be in the game for. So the opportunity is great because either ways, and even if you go from part-time to full-time and vice versa over and over, it's not hurting you. Like, it's okay to do so. Now, I talked earlier about what impacts the watch market, and this is a good example of some of the things that do. Just so we understand, like stocks, meaning that in general, like the financial markets have a significant impact on the luxury lifestyle industry as a whole, and watches fall right into that. So you're gonna see when stocks drop that you're gonna have more inventory on available, and prices are going to go down. And when you have a prosperous stock market, you typically have people buying, meaning actually a lot of Wall Street guys even rewarding themselves with watches, etc. So it does have a bearing on it. It's not a direct stock of the company we're talking about, but that does happen. The economy as a whole, obviously in the middle of a recession, we could buy some of these watches for a fraction of the cost, which was really nice, in order to store and then sell later. In a good economy, the opposite. Obviously, the more supply, the less supply, the more demand, the more the price goes up, and the opposite, vice versa. Credit markets also impacted because when people have really good opportunities to leverage credit, they have more cash flow. So if you have people that are buying 200-300K cars in cash, typically those, or on credit, I apologize, then typically those people have more cash left over to be able to buy watches and other things that are not necessarily as friendly to finance as cars. Metal markets like silver, gold, etc. Also, those things have a bearing on the watch market as well. If gold rises and you have a really nice all gold AP or all gold Panerai, well, guess what? The value goes up just on that basis. Now, market value may not change, but just the cost value goes up. And this is important because eventually that value drives up market value as well. And then, just supply and demand, which we talked about earlier, really important to understand that obviously the basic concept of, if there is less supply and more demand, there's going to be a higher price and vice versa. But this means that the watch market, not necessarily as a whole, but units based on what's on the market, will also be impacted. So no different than cars. If you are someone who is looking for, or who is someone who is looking at like a particular piece, you can look at that piece across, let's say, for example, eBay and some of these other places we're going to discuss, and you'll see that if there's not that many for sale, then obviously it's going to be a harder bargaining ground, versus if there's a lot for sale, there's a bigger opportunity to save. And again, then there's currency exchange rates. What those are is simply saying that whenever the euro is high, meaning whenever it costs more to buy, euros, then the price of watches is up, and vice versa, meaning that when the dollar is strong is a good time to go overseas and maybe look for pieces versus when the dollar is weak. So these are things you need to understand in general, because they're going to play a bearing on just the watch market as a whole. So if you see a trend across the board, you can usually relate it to one of these things. So I want you to come back here at that point and really ask yourself which one of these is that factor, and then watch how it works so that, as it happens again, you're not confused. Now, again, what happens when the actual stock market goes up or down? Just remember that the main thing it changes is the buying power. This is really important to understand, that when people do well in the stock market, they have more liquidity and they have more leverage to be able to buy watches. Now, this one is one of the bigger indicators of what changes the watch market a lot, because the stock market's an ongoing thing that has a lot of trends where weeks it's up, weeks it's down. So you're going to see the impacts of this more on an ongoing basis than some of these other ones, which may happen over a period of 6 months and then have another change, versus the stock market could drive some of those sales on a day-to-day basis, if not weeks. Now, the metal market, which we also briefly discussed earlier, you can see here, like, just to give you an idea, again, we said that, when the price of certain materials go up, obviously it's more than expensive to produce, which then drives certain pricing up as well for the watches. Because remember that all of the prices for used watches are built off of the real new MSRP prices. So there are times where you have pricing for a new watch that goes up, driving the used market up as well. And some of that is often related to the metal market, which is why this is our second more important indicator to kind of understand and to correlate if brand new MSRP values are correlated in any way to the actual price increases in the used market. Now, the gold market, which we discussed, is part of the metal market again, but I wanted you to see this graph because this is a very interesting graph that actually explains a lot. You can see here at times when 2012 and 2013, gold was very high. Again, we were at that point looking at pricing in the watch market, very, very high, especially around gold watches. As this dropped, the pricing completely dropped right with it. And you see, if you look right now at the 2016 mark for gold, we're still not that high, right? And gold's taken a big beating since kind of the recession ended and things have started getting better in the economy. Stocks have gone up and therefore gold comes down. So what ends up happening here is to just, the reason I wanted you to see this graph is to just look at over a 5-year average, look at on the lower part of the chart we are in terms of gold value. which means that right now gold watches are actually great value, which is why I own a few of them myself. But this is why you'll also see the gold, higher end gold watch market just actually be on the soft side right now. The silver market, while this doesn't hold as much of an impact, it is also good to take a look here and see that once again, the graph is on the lower part of the equation. These are some of the things that you don't need to look at on a day-to-day basis. These are just things I want you to have in the back of your mind. So as you engage with, understanding values and understanding and positioning value for 6 months ahead or a year ahead, or however long you want to keep your watch, it's also good to understand trends and how to read graphs to understand where things are heading. Again, no immediate direct correlation with silver, just kind of an indicator showing you that usually the silver gold market are pretty aligned in terms of if they're up or down from previous years, etc. Now, this part this particular stainless steel market can make a much bigger impact because most watches are actually stainless steel. And what this graph really correlates to is that when the stainless steel market keeps staying up, now, it doesn't mean it's up, but you can see the pattern here from 2000 to 2005, and then 2005 to like 2008. The main thing is to understand that when you have an 8-year streak like that, and we saw a lot of increases during that time, a lot of manufacturers have to pay more to buy stainless steel and then cut watches out of. And so what ends up happening is eventually they realize that, oh my God, this pattern's going on where it keeps going up. I absolutely have to invest and make sure in every way possible that I am able to get back my money, which is what they do. They raise prices every single time. So just something else again to pay attention to, because this market is a lot more volatile and it's trend-based, and as a result it actually highly impacts MSRP of watches and the retail pricing that manufacturers put on watches for dealers and so on and so forth. Here we can see a very simple example of a Panerai. That's a boutique watch for those of you that don't know. PAM 90 is a very popular model, especially for our actual system as well. But nonetheless, here you can see the increase in price as far as like the bumps, right? In price for the base MSRP unit. In 2001, a PAM 90 was costing $35.50 MSRP, and now in 2012, $9,700 MSRP. That is a significant jump, like significant. So, one of the things to consider here is, again, like you can see from 2001 to 2007, almost a double price increase, right? This is the key, because remember what we just looked at, the graph, right? So the graph really showed you how much the stainless steel market kept rising during that time. And so it's really important to understand that that's when they did their biggest increase. And then there's other things, such as they might need to increase the price to offset a recession and less units sold. I mean, there's so many things that impact the watch market and the increase in pricing. And there's also the idea of greed. But I just wanted you to see this graph and how an MSRP goes up. So to give you an example of how this plays into anything, imagine that you have a 2004 watch that MSRP'd at $4,300, and at some point that watch used was like somewhere around $2,500. Now the same watch today, the same exact watch, same older watch today, well, the new ones can be bought for less than 10. So you're looking at roughly like a bargain if you let it go at like the $2,500 whatever that you bought it at. Now if you bought it brand new, you're almost breaking even here, where the used watch market almost caught up to where it should be because of the price increases to begin with. Because you see, watches don't necessarily get better or worse. Some Rolexes do, some others don't. But the point is that the majority of watches are built off the same casing, same sapphire, and small changes. And so there's always a guy in the market for an older one as long as it's in good condition. It doesn't change the demand just because of the age. So this is something, again, we brought up earlier about currency markets. I wanted to go more in detail about how, just to understand the basic economics of certain country drive an increase or decrease in the actual conversion, meaning like your power to buy changes as a result of the European market or some of these other markets around the world. Meaning a lot of times you'll see this with a high-end manufacturer like Hong Kong. like in China, etc. When the dollar is strong, you'll see a lot more of their inventory for luxury goods such as watches, belts by Hermes, handbags, etc. Like real stuff, not just bullshit like from Asia, but real stuff listed on eBay, and a higher influx of it than usual because they understand that the U.S. market will dip its hands in China and buy a lot of great goods, especially if the dollar is much stronger and you're leveraging that as a discount without actually even asking for a discount. So not only could they get aggressive, but they realize that you're able to buy more for less, so they actually put it in front of you as to what they have in their inventory. But it's important again to understand the correlation between one and the other and how this actually plays out in terms of the watches you're buying.